All right, time for the finale. This is the final information you're going to need to know is trading plan and then your account balance and your risk. That is the last two things I'm going to show you because that means you're ready to enter the market and you're ready to start putting some money down and making some money. And even if you're not ready, you can start doing the demo trading to now put these lessons you've learned into practice. So let's go. Trade and plan. The first thing you're going to do as you enter your trade is your drop down analysis. That's the first thing you're going to do. As you look at the market, what am I seeing? And then you assess that. So you're going to do that. You're going to do your drop down analysis with your zones. So like I said, the 1 week, the 4 hour, and then the 15 minute, and then your entry is going to be on the 5. And then after we've done that, what's the trend direction? You can go to the overall trend direction, or you can go to the 15 minute and see what you're currently looking for. Then you got market structure. Okay, what part of the market am I in? Am I in the swing high? Am I in the swing low? Am I at the bottom? Or am I at the top? What where exactly are you within the market? Not just your drop down analyst, but within the market itself and the structure of the market. Where are you? Has liquidity been taken? And we've taken liquidity and we're moving back upwards. Is it a reversal zone? You need to be able to see this and mark this out and put it into your trading plan, and that is how you're going to be able to start trading. Then like I said, with market structure, you need to find your liquidity. You need to find your internal liquidity and your external liquidity. So you need to find your external liquidity to see what zones will be taken, and find your internal liquidity so you can see where people are getting in early and they're being induced, and you can find consolidation zones within the smaller time frames so you can avoid trading that. Then last but least, you've marked out your zones, you know where liquidity is, you know what trend we're in, and you know what part of the market structure we're a part of. Now is your daily bias. I would say weekly, but it depends on your trading. So I'm just going to say your daily bias. Now you are ready to go and tackle the day. So now what all you're going to do is see where the day is going. Are we starting with accumulation? Okay, if we're starting with accumulation, what's the trend? What direction are we going in? Is it going to sell off first, then buy, or is it going to buy then sell off later? That is what you need to decide for yourself. And then once you've ticked all them boxes, you're ready to go. So this is trading plan and your checklist. So you make your plan first, then before you enter your trade, you make your checklist. You attach the assessing the models to your checklist, and you attach your bias to your checklist, and you know exactly what to do. And that is how you trade effectively. That is how you become a safe and patient trader. It's not complicated, it's not hard. You just have to be able to give yourself that time to mark out your trades, and you'll be able to trade like a professional. No one will be able to tell you your trade is wrong because you already told yourself the trade is wrong. No one will be able to tell you, the market won't be able to tell you your trade is wrong because you already told yourself this trade is this grade, this ticks all my checklists, I'm ready to take this trade. And even if it goes the wrong way, you now have to just take that trade and analyze it and decide, why has this trade gone wrong? Was my stop loss too small? What did I not analyze the market properly? Okay, cool. What exactly happened? And then it goes from your checklist to now your analyzing of the trade. And that is how you trade, and that's how you become a better trader. And then last but least is the account balance and risk. This is really important because a lot of people are just blowing accounts and they're not realizing they're blowing their accounts because of how much they're risking per trade. Rather than giving yourself that time to build and be a better trader, they're just risking whatever they're risking, and they're just expecting to make money the next time that they trade. Let me tell you this for free. That's not how trading is going to work, or that's not how trading is going to work with me and as you as my student. So now what we're going to do, I'm going to tell you exactly I'm going to give you rough estimates, and that's where we're going to go. So the first things first, if you're taking a prop firm challenge, the most you should be risking per a trade is 1%. Literally, that's the most you should be risking. No more than 1%. Even 1% is still a lot because of how much leeway they give you with your daily drawdown. So 1%, that gives you at least 5 losses, or 4, because 5, you've already blew the account. So that gives you 4 losses within the day to blow your account. You don't need 4 losses because, like I said earlier, I take 2, 3 losses and I'm done with the day. So your maximum you're risking is 1%. After 1% is 0.5 is 0.50%. So that's half of your 1%. And that is all. You can do 25% if if you don't feel the trade is confident, it's a good trade and you're not confident about the trade, or you're not confident about yourself in general. You have to now take it in baby steps. Maybe start the prop firm trade with 25% of the account, then 0.50% of the account, and then 1%. Work your way up, build your confidence with the account and the account balance, and then you can tackle what any account balance you need. So now let me put this into numbers for you. If now you've got a £10,000 pound account, 1% of that account is £100. Literally, it's that simple. So you're only risking 1%. So you're only risking £100. If you're now risking 0.50 of that account, what you will be risking is 0.50 of that account. No, yeah, you'll be risking 0.50%. So 0.50%. And that is it. It's that simple. Quick maths. Even if you're not that great at maths, you can go on Google, you can work it out. Let me give you the working out on a calculator for a 10k account. 10k account, let's write 10,000. 10,000 times 0.01, that is your 1%. Press the equal button, it will tell you how much you can risk per trade. That is it. And then that on the lot size is a 1 lot. Then if you now want to go to a 0.50%, that is a 0.5 lot on a 10 account. And you do the exact same working out. So you do 0.01% on the 10k, and then you divide it by 2 and you've got your 0.50%. That is it, guys. Don't risk no more, don't risk too much. Trade effectively, trade nice, trade smooth. This is how we get rid of emotion in trading. This is how we get rid of impulse. And this is how we change our psychology to be consistent traders. With that, your account balance will start to build one by one, and you'll just start accumulating your profits. And you'll start to look at your profits on a daily basis or look at it back over the week. And you'll be able to say to yourself, okay, cool, I made £50, and then the next day I lost 100. Next day you made 250. Next day you made 250. Then you lost 100 again. Then next day you made 300. Then next day you made 300. Your losses are becoming so minimal that your profits are just building on top of each other. Your profits are climbing on top of your losses, and it doesn't mean nothing to you no more. You've passed your challenge, or you're just accumulating money on your personal equity account, and it's just happy days. And that's exactly how we trade. That's exactly what we want to see as traders. And then you can hopefully later on, you can go into teaching people, and then I can be smiling looking at you saying, yeah, I'm proud of the trader you've become. And guys, let's just work together, let's build this community, and let's make people understand trading isn't about gambling, it's about probability. And probability and possibilities. That's all tradings come down to, and we want to show the world that this is how we do it. And so Dream One lifestyle, guys. Chase the lifestyle, dream the lifestyle first, chase the lifestyle, and then earn yourself that lifestyle, and then show the lifestyle to the world, guys, man. That's all I have to say, and I'll see you on the next volume.